Hello, guys. This is Jad from Liquidity Hunters Academy. Today, we will go on a trade breakdown for silver using the market maker model, and I will apply it on two time frames only, the daily and the H1. This strategy can be used by traders that work from 9 to 5 and have not enough time to spend on charts. So, before I start, I would like to nominate the giveaway winners: Carl Coleman and the bond trader. Each one won a 6K two-step stellar evaluation from Funded Next. Funded Next is the leading prop firm in the industry, in my opinion, due to the variety of challenges they provide and the services as well. For example, they have a 15% profit sharing from challenge phases. So not only they refund your challenge, but they will provide you with 15% on the profits made during this time. Also, they do not have any time limitation to pass the challenges, and their drawdown is based on the balance, not on equity, which is a great factor. Also, they have really low spreads and commissions. Like spreads are very, very low. Okay. So they provide a one step and two step challenges starting from 6K up to 200K at very affordable prices. Also, they provide the chance to all traders to prove themselves in a monthly competition for free. So, if you would like to grab an account now, I will be leaving in the description below a 12% discount on your first purchase and a coupon for a 5 additional discount for any account size. Without further ado, let's hop into the charts and discuss the trade. So as you can see here on silver, price dropped, grabbed liquidity below these lows, and left behind low resistance liquidity run, which price will have to revisit to grab them. Okay, so by looking at the chart here, we can notice that price moved, grabbed the liquidity from the top. So as if we got this move here with this, and this. Okay, so now we broke structure at this level. Okay, so price will have to retrace back into a discounted area from the zone, maybe tap into the daily fair value gap before moving to the upside again and grabbing these equal highs here and the liquidity lying above these highs. So while waiting for this move here, we are on the daily. We can notice that we took an old high level at this area here and we grabbed all this liquidity. So what we do next is we move to the 1 hour time frame and we wait for a market structure shift. Now this is the 1 hour time frame, and the market maker model starts from an initial consolidation, which is available here. I'm gonna show you. This is the original consolidation. After the original consolidation, we have an up move, an expansion, and then another consolidation coming into a second accumulation phase. So this is accumulation phase number one, phase number two. We can get up to three, maybe four. It depends on the charts. And here we have our last move. So if we play price forward, we can see that from the last phase, you will get this solid pumping move that will liquidate all people that were shorting silver and had stops above these highs. And this way, also, breakaway traders, the breakout traders, sorry, will start to enter into long positions once price move above this. So they entered here or after the retest of this area, and they are buying targeting this area here. What we can notice clearly is that price now created this up move, and we have this low that created the up move. So this is our point of reversal. This is where we need to see price closing below. Okay, so I'm gonna move one candle at a time to find the setup. Here you can notice that price returned inside of this fair value gap here, a small entry inside it, okay, and started to deliver lower. So here, for instance, we can see that not only we took this high, this low, we took also this low, and we are heading towards these levels here. And as we were saying, price needs to retrace into this leg from the initial consolidation to finalize the market maker sell model. So if we just select the leg from here to here, we can identify that the initial consolidation occurred at 25% of this range. At the 50%, we had like a big move with a breakaway gap. Here we had a gap. And then we had last accumulation zone around the 75 before hitting the terminus level. Okay, so I'm gonna remove this. This is like extra confluence for you to understand where you will be expecting the ranges, the accumulations before the big move. So here we took the lows and we are heading into our setup. So what we can do is once we set an alert here and once price crosses it, we start to look closely at the charts on the 1 hour time frame. And once we see the peak, we set another alert at the low that was causing this up move. Okay, so now we got an alert that price did cross. Okay, so if we play price forward, we can notice here that we are leaving fair value gap, and we have another one here. In this case, you can just wait and check the entry on the 5 minute time frame once price returned into each fair value gap and wait for another shift. But if you are a 9 to 5 trader and you do not have time to do so, the only way you can do is to start from the first gap and set your limit order at the 50% of this fair value gap. Okay, so here our entry was at 25.27. Okay, and we had to cover this high. This high was more than enough for us. Why? Because this high already grabbed liquidity from this fair value gap here. So there is no reason for price to push higher than this. Of course, if you want extra confluence, you could extra risk. Then if you would like to protect your risk, you can put your stop above this high. But for me, here is more than enough because we have this fair value gap and another fair value gap here, like the ST model. Okay, so Here, we could easily be safe, especially that we are covering as well this breaker block. So we have another fair value gap, a breaker block, an order block. So we have like three PD arrays to covering our trade. So this stop is more than enough for us, okay? So we set our limit order here and we target the consolidation being here, okay? So as I recall, we had 280 and 2030, 7.25 R. And here, if we play price forward, we can see that this is a set and forget trade, or you could enter many positions, closing some at the low hanging fruit, this liquidity here, or inside of this fair value gap or this fair value gap. But based on my back testing, I was able to hold trades for a longer period, especially if I know that we're going to be moving lower. Okay, so I will always target the consolidation or 10 to 30 pips below it as well. But for the purpose of this video, I'm going to show you the one shot, one kill trade, one entry a week, and you're fine. You can even be profitable even if you work from 9 to 5. So here we can see that price tapped into the fair value gap and tagged us in, and directly it dropped and grabbed all the liquidity here, just not to give time for anyone to exit their positions. And if we play price, let me just use the 3 times and click on play. You can see, guys, how price is moving to the downside, creating more liquidity to the upside, being low resistance liquidity run. So after grabbing the first zone, we had an accumulation, and then price returned, retested this area and started to drop again. You can start to see that every PD array will hold. Why? Because here at this level, we had some order pairing, i.e., financial institutions started selling and are bearish for the time being. So every zone will be respected. You can see here that this fair value gap gave us another entry. This return, this drop, and the retracement here. The order block did hold, and we pushed lower into this resistance. So you could have set like your first TP here, your second TP, your third TP, your fourth, and you could even leave runners down to the daily fair value gap here. Because overall, if you just check the trade and you see all the chart here, you can see that market had to retrace into the 50%, below the 50%. Now it is at the OTE level, and we just tapped inside of the 50%, the consequent encroachment of the daily chart. So here, for example, we could start looking on the 1 hour time frame for our new setup to the upside, if this is feasible or not, if we did clear enough liquidity or not. Maybe my next video will be about the setup. I will check if it will form and I will get back to you guys with a new video. If you would like to get some one-on-one mentorship, please make sure that you follow me on Telegram as well and you DM me directly. Also, make sure to subscribe to this video to receive everything that I put around 10 days. Each 10 days, I will upload a video showing a trade breakdown or maybe some material to help you guys become financially free. So, as a reminder, make sure to check the description of this video where you will find a link to get your 12% discount on Funded Next. And for more trade like these, I would be really happy to have some suggestions in the comment section. Have a nice day, guys, and trade safely. It's December, end of the month, end of the year, end of everything. So now the algo is resetting and we will resume in January 8th or February 7th. We will start getting good moves in the market. Peace.